Hi, I'm Bill Moore, and I'm on a mission to bring alpha to your trading through the power of relative value analysis. If you're looking for candlestick patterns, then go look someplace else. But if you'd like to trade like professionals do, then stick around. So today we ran 10 baskets of the sector ETFs, and with those 10 baskets, we have lots and lots of things to choose from. So I put on a bunch of filters: 0.8 correlation, 0.8 RW coefficient, at least 1.25 standard deviations from the mean, a minimum of 3 winners in the past, and currently a 5% up or down expectation value 30 days out. So when I did that, we still had a lot of things to look at, and I'm afraid today I might violate a rule because this picture does look good. The one I'd like to look at is AMGN versus PFE. Okay, it's in the medical side, but these are two pharmaceutical companies, and I have a kind of a love-hate relationship with trading pharmaceuticals. So let's go look at the analysis. Okay, so the picture is obviously, amazing, right? That's just a great looking picture. That's exactly the kind of thing we want to see when we go look at a picture to trade pairs. And it took a sharp little move down. Now, that sharp of a move down probably means that we're going to watch it before we just jump right in. We're not going to automatically do this, but it is right down at its, close to its lowest ever. So it's certainly something to watch. The track record is perfect, indicative of this picture. It's not outside the second standard deviation just at this moment. Let's go look at it in the observe page. So the picture looks good, and look right down here. It took a sharp, the last 3 days, a really sharp drop down. So again, when it's doing this sharp of a drop, you're not going to just jump right into it immediately. But the track record and the history for the past couple years is very, very good, right? The reason I'm not a fan of trading pharmaceuticals is because these companies tend to behave very independently. So if one of them has a big breakthrough of some kind, it takes off, or if one of them has some big failure in some testing things that everybody was anticipating going well, they drop. So I'm not, like I said, I'm not a big fan of trading pharmaceuticals, but that picture really looked pretty good, right? So let's take a look at the hitting probabilities. The picture here looks great, no problem here. Let's set this for 10,000 and run the Monte Carlo simulation. So the current value is minus 20.35, and in 30 days it's saying basically 89-90% of the time that we're going to be above this current number. So that's 90% saying at least that we're not going to lose money. 50% of the time, as far as getting back to the mean, it says 23 bars or less, and the mode being 11. So these are all quite acceptable numbers, and my only reservation at all is because these guys are pharmaceutical companies. So to me, it's a little bit anti the whole philosophy of trading pairs, of trying to reduce risk, because very, very often the most independent stocks out there are the pharmaceutical companies. So anyway, the pictures here have looked really good for the last couple of years, and I think we're going to go ahead and make this the recommendation. Just be aware that higher risk on these guys. They're kind of the opposite end of the spectrum from the utility companies. So great picture, hitting a number down right next to the lows of the past couple of years. We're talking AMGN versus PFE with a ratio of 4.8. Correlation is 0.86, RW coefficient 0.822. These are all great numbers. A perfect track record. So the past couple of years, it's been a very, very well-behaved pair. Let's hope it holds together for the next month or two so that we can make some profit from where it's currently at. So we're going to make this the recommendation. AMGN minus 4.8 of PFE. It is a long, so for every share of AMGN that you buy, you're going to sell 4.8 shares of PFE. Good luck with your trading.